the previous estimate of 13.55 million barrels per day and 2024 average of 13.22 million barrels per day. Elon Musk's social media platform X, formerly Twitter, has raised nearly $1 billion in new equity funding from the investors, maintaining a valuation similar to when Musk took the company's enterprise value at roughly the same level. The report also noted that Musk participated in the fundraising and the company may use part of the proceeds to reduce its remaining debt. Some sources who requested anonymity due to the private nature of the discussions confirmed Musk's involvement in the equity raise. One source added that X is considering using part of the funds to pay down its remaining debt, the report stated. Dasana Capital Partners, which previously acquired some of X's debts earlier this year, also took part in the equity round, Bloomberg reported. Additionally, the investment firm 1789 Capital, which has backed Musk's ventures XAI and SpaceX, was among the investors. This development comes barely 2 weeks after said in a post on the platform last Monday as outages affected users. Musk had previously blamed the cyber attack without providing evidence for crashing the site last year when an interview with Donald Trump was scheduled to be streamed. We go on a break, and when Welcome back and thank you for staying with us. And now on to the international market. Gold prices retreated from a new record high on Thursday as investors booked profits after the latest leg of a rally that had seen the metal gain almost 16% this year, driven by safe haven demand and expectations of lower interest rates. Spot gold was down 0.4% on the day at 3,000. Gold acts as a hedge against uncertainty and tends to do well in a low interest rate environment. The stage seems set for gold to continue higher, but the market may run out of near-term catalysts as traders price in the new post-FOMC consensus, said Ilya Spivak, head of global macro at Tasty Life. Investor demand for gold has surged in recent months on the uncertain economy and geopolitical backdrop. If the recent growth in demand evaporates, it would expose the market to downside risk, ANZ said in a Thursday note. Spot silver fell 1.4% to $33.33 an ounce. Platinum was 0.5% lower at now $88.45, while palladium dropped 1.3% to $943. Gold remains firmly bullish with the next resistance at the psychological $3,100 level. Weakness below $3,030 may trigger a decline lower, said Lukman Otunuga, senior research analyst at FXTM. U.S. stock indexes opened lower on Thursday as worries about the fallout of U.S. tariff policies returned a day after the Federal Reserve stuck to its monetary easing plans, but warned of an uncertain economic backdrop. The Dow Jones Industrial Average fell 244.44 points, or 0.57% to 42,727.18. The S&P 500 lost 40.71 points, or 0.71 points to 5,634.40, and the Nasdaq Composite lost for 162.59 points, or 0.95% to 17,585.75 at the opening bell. World markets slipped on Thursday as signals from the U.S. Federal Reserve and the number of other top central banks that remain in rate cut mode amid global uncertainty kept the bears on top. Trade war and actual war worries pushed Europe's main share indexes nearly 1% into the red early on, while the dollar and safe haven government bonds both rose and gold scored its latest record high overnight. There was little reaction as Switzerland cut its interest rates back towards zero. Sweden kept its borrowing costs steady, while the Bank of England was also expected to sit tight with its latest rates decision at 12:00 GMT. Wall Street futures were still pointing higher just about. The Fed on Wednesday had left U.S. rates unchanged cuts by year-end. Policymakers did revise up their inflation forecast for the year and marked down their outlook for economic growth, citing risks from U.S. President Donald Trump's tariff policies. Still, investors took comfort from the Fed's dot plot and Chair Jerome Powell's comments that tariff-driven inflation will be transitory and largely confined to this year. We think unemployment will be the ultimate arbiter, PIMCO economist Tiffany Wyden said, predicting the Fed would cut aggressively if the jobless rate starts to move higher. The prospect of further Fed easing this year saw gold scale yet another record high of $3,057,021. In the bond market, U.S. Treasury yields dipped to 4.22% and Germany's bond yields eased to 2.77% after hitting their lowest 2.748% in almost 2 weeks. The